It's March 21st. Ron and I are here and we're going to go over probably a pretty short meeting. I have a license agreement with Ron to utilize his materials, and the agreement requires me to share this notice. I do have his written permission to utilize his products in this manner. This disclaimer protects us as well as you. Everybody here is covered by this. Everything we talk about today is educational and informational purposes only and should not be construed as advice. There's no advice being given today, just everyone's opinions. And consequently, you and you alone are responsible for how you evaluate and utilize what you hear and learn today. Our agenda is very brief. As I said, we're going to cover the current vision status, and then we're going to look and talk about the market forecast and what all is taking place in the market. Current version is K. That was updated August 3rd of last year. When you log in, you'll see that it talks about there being this January version. Well, the January version is still K. That's just the date that's updated to show the forecast that Ron had placed online. I'm still working on the online version, which I call Pi Visions. I haven't done a whole lot why? Because it's pretty much running as it needs to run. Those of you who are using it, if you see any bugs or see anything you'd like to see improved, then let me know, and we'll get those things addressed and taken care of. But I've kind of put that on the back burner this past month. Got taxes to do and all those other things that take place. Okay. I'm sure you understand that it's other things more important. All right. Actual update as of yesterday. Ron's going to cover that. The forecast, you take it away, Ron.
Okay, so here's our factors that we selected. It doesn't represent the current situation, but we just said for the year interest rates would come down. Well, I don't know. That may not be happening, but we'll test that out. Unemployment rate up, oil flat, growth rate flat, weaker on the dollar, second year of the presidential term, consumer sentiment flat, Cedric chart A to B. So here was our forecast. We said, whoa, it's going to be a 13, 14% up. Not as much as in 2024 and 2025, but still an upward trend for the year. And let's see what the actual is. Well, the actual is falling, going straight down. Look at that knife there. I grabbed that. We were really right in sync for quite a while until this whole war situation, which is causing this price of oil. So this forecast probably won't materialize unless things really change. And will they? We really don't know. It's a real guessing game. And let's look at some different factors if we change them.
Well, first we hit Outlook.
Okay.
And so
Outlook says recover soon, April, May, back to where we were in February. But this again is based on this trading cycle and looking back 5 years, okay, of what the ups and downs have been during this period in the calendar. So
the point that I make in the trade alert that you'll see later today is that there's a historical bias to the upside, which obviously the last 3 weeks has not been what's been taking place. The market's clearly moving down because of the conflict in Iran. And so we actually, it's pulled down the potential for a record high in the next 2 months, which we've been seeing out there. So the other thing is that the algorithms don't have a conflict setting. And so we're obviously, I'll set this up for Ron, the next thing. Without having a conflict setting to it, the only thing you're left to do is to adjust the factors that we have in place. Um, and so then uh, Ron and I looked at making some of those adjustments, and I'll turn it back over to you, Ron. If
Right. Okay. So
anything you want to say about this particular
S&P
chart?
500 chart was really telling you, look at where, that red line way to the right. Okay. That's we're on a very steep downward trend, but, is this, temporary? It's all related to how long this conflict is going to last. Price of oil is a major, it's the major contributor to what's happening. So let's change our forecast by changing uh, interest rates up. In other words, there already is a feeling that the Fed might have to raise rates, not drop them. So interest rates up, unemployment up, oil prices up. Okay, so these are negative factors. Interest rates up, unemployment up. Those cause negatives in the market, and oil up also. Growth rate flat, dollar getting stronger. Presidential year hasn't changed, and consumer sentiment down. People are in the dumps, right? Well, look at the forecast. You put those factors in, and sure enough, it's going to be a tough situation going forward. Might be some recovery, but this is saying you're going to have a drop down to 6,400 by the end of the year. Now, how realistic is this? Well, we're at 6,500 now. Not very much left to go down that far. So, uh, if in fact interest rates go up, the price of oil is going to go up. When? How long will it stay above 100? Will it get back down to that 60 that it's been for the last couple of years? Might take a while. So this chart might be pretty realistic of what to expect in the future. So it's kind of throwing out a cautionary flag here is being raised on what's happening going forward. So don't assume that the market is going to really recover back to where it was. It may take a while. Sorry to say, but this is reality, I think.
Okay.
So with that, any questions? I mean, what are other people's thoughts here? It's price of oil is a very key factor in the economy, the whole economy, not just for driving gasoline. It's the economy, all the transportation products that are based on oil is big.
Corrugated mills. In the last year, two major corrugated mills in the Pacific Northwest permanently closed. The other corrugated mills that are running slow or taking downtime because manufacturing is down and it is eliminating the demand for new material. And these mills, when they were originally built, were designed to run 24/7 and only turn off for maintenance. The one mill that Ryan buys for, they're only running 12 days a month.
Wow. So that's
and the price of scrap paper and with what's happened to transportation costs, mills have to be where there's large rivers because they consume unbelievable amounts of water in the process. The gentleman that bought my business right now isn't paid enough for the fiber to cover his transportation costs to get the material up in the Pacific Northwest. And your newsprint mills are all but closed because how often do you see a newspaper mill?
Yeah.
But those particular items definitely affect the economy. They really do.
Yeah, I'm seeing less and less Amazon boxes and more they're
Bags.
they're putting them in bags.
Yeah.
And some of them are paper bags, but a lot of them are, nylon plastic.
Yep. Yep. Well, and the other reality is your white grades, paper towels, napkins, toilet paper, toweling, and tissue are all made from sorted office paper and printer's waste, and the products that they use to make that material. Businesses aren't keeping the records the way that they used to. Magazines aren't printing the way they used to, and the printer's waste isn't what it once was. Ultimately, we may be affected, not in my lifetime, but ultimately, at the rate it's going, this country could be affected on your white grades paper no longer being available. Because if you can't get the scrap material to make it, what are you going to do? And unfortunately, it takes 17 adult trees to make 1 ton of paper.
Mm-hmm.
And
well, so being a new homeowner, because we sold our property in Florida, the house furnished because it's Florida furniture. We figured we moved north. We're not going to be able to use any of it anyway. So the whole thing was based on it's furnished. So we didn't take any furniture along at all. All we took was personal items and some pictures and so forth. So now we're in the process of re-establishing a home with furniture. Would you believe that the places we've been, they can deliver almost the next day. Okay, in other words, the demand is so low that I'm totally amazed, because we were thinking of using the washer and dryer that were in this unit when we bought it. Well, we had some problems with the washing machine, and the dryer works, but the pair is 20 years old. We figured, okay, we're going to have to replace it. Well, I went to Home Depot and I could get it in 3 days. In other words, there's no waiting line for taking delivery of product. If you can pay for it, they'll deliver it very quickly. So it's totally surprising, which tells me that demand is going down, and that's going to affect the economy. There's a slowdown happening, and we have to recognize that, okay? And that forecast I just put up there could have a lot of reality to it, in the sense that things are turning around and it will not be an up year. So,
well, and just the cost of living has got so high. People a lot of people don't have the disposable income to go out and buy new things.
Yeah.
My brother-in-law was a cattle rancher for years, and he kind of retired from it 2 years ago. What was a yearling 2 years ago that sold for $1,400 is now $3,200. And a full beef to go to the slaughterhouse is now $5,000.
Wow.
So when you go to the store and look at the price for a pound of hamburger, that's where it is.
Yeah.
The hay that he used to sell, bales of hay for 500-pound bales of hay would sell for $58. Now they're hundreds of dollars. And just the cost of everything is escalating so bad that I think that has a lot to do with people not having the disposable income,
right,
to do as they please.
Well, my former employer went from a fairly aggressive expansion in the summertime for all the people that were supposedly going to be traveling to just announcing they're cutting back 5% in the current schedule just because of the fuel prices. They haven't yet even considered what's going to happen when demand drops off. So I guess my point in mentioning that is, yes, this is kind of far reaching. It's going to affect a lot, I think.
We hit $2.99 in Salt Lake yesterday for gas. I don't know what you're having.
$2.99, is that all? It's $3.75 here in Maryland.
It's almost worth me driving down there.
Fill up.
You know what's scary? We export more oil than we import.
Well, you know why? The quality of our oil is not in alignment with the refineries that are in America.
Yep.
So it's more of a swap, but you're correct. I mean, we export oil and import oil, and we will always import oil because of until the refineries were to be changed. And of course, there's not been a new refinery built in how many years? Of course, they claim that there's fixing to be one built, but going to cost billions of dollars.
Yep.
But no doubt, I'm sure that they'll take that into account, that they'll set it up to where it can refine American oil.
Well, I have to say that I live 30 miles north of where Ron lived. He was in Marco Island. I'm up in Bonita Springs, Florida, just right on the Naples line. And our rentals are up 20%. The boxes in the clubhouse are stacked up more than I have ever seen. So maybe all that cardboard's coming to Florida. I don't know.
Hey,
Rentals are
West
up.
Rock, you got a hell of a paper mill in Florida called West Rock Paper.
Well, we got a lot of pine trees too. But it's kind of interesting. I look at pending sales and new listings as a monitor. This is my 54th year in business, and I've always noticed when the pending sales and new listings are close together, we have a stable market. Well, pending sales have been about 50% of new listings for a long time because people were selling, prices were elevated. Well, prices have moderated and come down, and pending sales are jumping. So in the last 2 weeks, we've had several times when pending sales were over new listings. I mean, and which is a sign that the market's getting stable. And I've had 3 sales in the last 2 weeks, so it's picking up from what it was. And I just wish they'd get all those cardboard boxes out of my lobby down here.
The other interesting thing that's happened up here in the Midwest is BP has a huge refinery in Whiting, Indiana, and they just locked out 800 of their workers in a contract dispute. So, on top of everything else, I'm kind of keeping my fingers crossed and see how that does with gas prices.
Isn't it fun?
Yeah. It's like I wake up in the morning and go, okay, do I want to look at the news? Now I've decided that, okay, I'll look at the news as long as I'm not holding my coffee cup.
Well, the fuel thing, now, this is part of being old enough in 74 when they limited how much gas you could buy.
Yeah, I remember that. What day of the week you could buy it on too.
It's amazing if you had enough show passes, how much gas they'd let you buy.
Well, so that's where we are. And, I guess, other than the fact that, we really don't know what the economy effect will be if the Iran thing gets settled. I don't know if it ever gets settled. That's sad when you have a country, that's doing what they're doing. I mean, what amazes me is over the last 10 years, they sure as heck built a lot of rockets and drones that they can still fire all this stuff. Where did they hide this all? Didn't our CIA know what the heck was going on? I mean, we have all this high-tech satellite stuff. You think we would know where they're building all these drones and all this stuff? We should be able to count them. If we can read license plates from the satellite, we ought to be able to count how many train cars are moving where.
Well,
It's, really surprised me that they can keep firing all this munitions. I mean, we're sending a $1 million rocket to shoot down a $20,000 drone, which is something wrong with this picture.
we're holding stock in the wrong companies.
Yeah. But yeah.
Well, they've developed rifles now that can shoot a drone down, so maybe, I don't know. We need some sharpshooters.
I don't know what, but I think we need better intelligence.
No comment.
I mean, Israel has good intelligence, but even that, what they're sharing is, you know, they don't have enough people inside around, I guess is the problem.
Well, that's
Most
one of the
people
problems.
have been killed, I guess. That's the issue.
Yeah. Countries closed off like Iran, North Korea. I mean, it's hard to put Americans in there and
Yeah, right.
not stick out. And then it's very difficult to recruit native.
Sure. So
So yeah, so you're down to signal intelligence and what you can visually see from the sky.
yeah.
All right. Well, I guess that concludes what we have for today. There was no visions request, and so with that, if you ever have any questions about using visions, let us know. We'll be glad to spend part of the presentation time doing that.
I have a question.
All right.
I see a lot of these ODTE options,
Yes.
0 days to expiration options and 1 day expiration options. I don't know if that's just a gimmick, but when I look at the charts, you guys are pretty accurate a lot of times on where things are going. I don't know if I have the guts to play the game, but I was just wondering if there's anything that's there that we could use to predict a day or 2 days or 3 days or something like that.
Back when I was working on the algorithms for Outlook and the market simulator, I was doing a lot of work on machine language learning models. And I came across one that was pretty accurate for the next day. And of course, at that point, I was trying to find something that was good, 50 trading days out into the future, or something based upon economic factors and how well that would do. So, maybe I could resurrect that and start back testing it to see how accurate it was. But it looked encouraging. But then again, I didn't want to know what the market was doing tomorrow.
Right.
I wanted to know, what it's doing in a week or 2 weeks or 3 weeks. I still see a lot of the talking heads, as I'll call them, or the profiteers who talk about spread trading, and they're still saying, the thing is, you go out 3 weeks, go out a month, and whenever you make, half of your money, 50% of the potential profit, close them early. There was one guy, and I haven't watched his video. There was a guy who was touting the 0 DTEs, having a bunch of webinars like almost every day this week. I did see briefly, he was talking about, the volume that's in those. There seems to be a lot of contracts that are being traded on those short time periods. I still think you've got to be directionally right. I mean, there's no neutral hedging strategy that's going to pay out, but you got to be right every time, it seems like.
Well, when you get it figured out where you're right every time, let me know.
All right.
Let us all know.
You all know. That broadcast will come from some island somewhere, okay?
That you own.
That I own. Yeah.
Right.
Uh,
In the meantime, though, we're just gonna, I mean, I appreciate Dwayne, you calling out Ron's and my record. And, it's, it's not just, and I've said this time and time again, Bob Anderson, your testimony to it also. It's not just using visions blindly, it's combining that and looking at other things. I like to look at technical things. Ron likes to look at fundamentals. Bob, you've got your indicators, your RSI. I always, anytime I look at an RSI chart, I go, Bob Anderson knows this. We had another user for many years that used Elliott wave, and combining that with visions, very successful.
Well, when I originally started with technical analysis, and I do
Yeah.
have a very elaborate charting system, and it'll do a lot of different things for me. You can plug in MACD, you can do all kinds of stuff. It'll on a chart, it'll suggest when to buy, when to sell, and I use that along with my other research stuff.
One of the things that I mentioned earlier, I hadn't worked a whole lot on Pi Visions because it's running, it's working. But what I did do, I spent a couple of days, Dwayne, this is actually in response to your question, looking at an optimizing process to be used in selling puts or selling spreads. And most spread trading, you pick a price and then you figure out how much lower like puts, like selling puts. You can vary the spread distance. You can vary how far down you go for that short strike. And you can vary how far out in time you go. So you got three variables that you could optimize. It's similar to the black box approach that Ron took in finding when to enter a position, what's the optimal sell on gain, sell on loss price. It's simple optimization, which you can write, you can program that pretty easily now. Whereas, 10 years ago, it's a little bit more difficult. But I hadn't thought to try to figure out how to do that for like a 1 day 0 DTE. I know that there for a while, many years ago, I'd sell a put on Friday morning that expired, Friday. So in essence, that was 0 DTE.
mhm.
But that's not something I stayed doing. It was fun. It's kind of like gambling. I mean, it's like, what are you going to do today?
And I sell puts and then I follow them and I'll buy them back for a nickel or less. And that's kind of my chasing point.
Yeah.
And I had a puts last month that would have expired yesterday. And on Monday, I bought them back for a penny a share.
Yeah.
If I'd have kept the stock till Friday, I would have had a put too.
Yeah. I've been teaching my son spread trading because you can limit your capital. You can kind of grow a small account using spreads. Doesn't take as much capital, and you can use margin. And so, same thing, Bob. There's a lot of things we'll wake up on Wednesday or Thursday and say, yeah, we can close it for 2 or 3 cents. Do it.
And I do. I don't. Hey, I've made a good profit on it. Why leave it out there for a crapshoot?
Right. If it's not a trade you'd put on today, then you ought to consider closing it.
Yep. And do I end up rolling? Yeah, sometimes I have to roll them out. So be it. I make a buck when I roll them out, so I guess I can't complain.
Right. Right. So hopefully that answers your question, Dwayne. I mean, we talked around the topic somewhat, but
No, it's very good. I love selling puts, and I like your odds chart. I won't sell one unless it's less than 1% that I'll be assigned, and I can look at that instantly. It's so convenient, and I just love it. I lost money in the futures. I lost money in the downturn when the .com error bust, and I've made it all back through using your percentages and change and options and I tell you what, if it hadn't been for that, I wouldn't be in the market.
Lost him.
yeah.
Anyway,
All
I don't want to get to gambling. I do want to invest.
Right. Right. Most investments take time. And so whenever you start talking about zero DTEs, it's kind of like throwing darts. There's people who can throw darts and hit that center.
Yeah, that's true. So.
Yeah.
Very good, Tommy.
All right, Ron.
We got it all ironed out.
Thank you all for participating. We'll send your comments for next month and we can add those to the discussion list.
Very good. Thank you.
Sounds good.
Thanks very
Take
much.
care, everyone.
Everybody have a
Bye.
wonderful month. Nice seeing you.
Stay warm or stay cold, depending on where you're at.
Where you are at.
What day it is?
Definitely a mix. All right. Take care. Bye-bye.
Bye.
Bye-bye.
Bye.